Alrighty. I see the numbers are still growing here, but why don't we kick things off and begin to dive in? I'd like to say hello, everyone, and welcome to the Partner in Focus session between DIA and Dopex. These Partner in Focus sessions are a series we've launched to bring more visibility to partners within the DIA ecosystem, to explore their products, and to highlight the technical collaboration occurring between them and DIA. And for those of you who are joining us for the first time or are unfamiliar with DIA, DIA is a cross-chain data and Oracle platform specializing in the sourcing and delivery of customizable data feeds both on-chain and off-chain. DIA's offering comprises cryptocurrency price feeds, NFT floor prices, fair value price feeds for liquid staked tokens, random number generation, and more. And all of these feeds can be accessed across 38 different blockchain networks. Today, we will be welcoming a partner that is a decentralized options exchange with a novel approach towards staking yield, collateral borrowing, risk minimization, and price efficiency. The team has distinguished itself as a pioneer in the options market space for quite some years now, so I'm sure you've all heard of them. I'd like to welcome Dopex to the stage. So on behalf of Dopex, I believe we're joined today by OEX Saitama, who's a BD and growth lead at Dopex. So OX, can I call you that? Would you go by 0x, Saitama? Can you hear me, and how's everything going today?
Yeah, I can hear you perfectly, and everything's going good. You can call me Saitama. That works for me.
Perfect. I love it.
Yeah.
Awesome. And at that said, why don't we kick things off with an introduction, Saitama? We always like to start by gaining an understanding of who we're speaking with. And before we dive deep into the details of Dopex, can we hear a little bit about you? So, like, how long have you been in the crypto space, and where'd you come from before that?
Yeah. So I've actually had this background that a lot of people are surprised by. I was in construction, so I was a completely unrelated industry. But I've always had this keen to finance, so I wanted to explore more, and I was like a part-time investor and stuff in other just like personally, right? Like just as a consumer. But yeah, crypto piqued my interest when back in, for example, I think it was like 2020, when basically everything was starting to pick up, right? So I got it in pretty early from the beginning of this bull cycle, right? The last bull cycle, basically, and I mean, like everybody that got into in that time, right? Back in 2020, there was a lot of these things that were hard to understand for retail users, right? Like there was Olympus or Time with Wonderland, right? All these super high APY numbers type of protocols. So back then, to be honest, I didn't understand that much of crypto, of what was happening back then. But like I knew everybody was jumping the boat, right? So just me basically trying to explore the Web3 world, and just like digging into like a bunch of articles and stuff like that. So I came up with this pseudo name, Saitama, as you mentioned, just because this is one of if the basically people don't know this, it's an anime that you can watch. It's called One Punch Man, and the main character in the anime is basically Saitama, and he basically kills all the enemies like in one punch, right? Like that's the funny part about it. And I just like the name because I like the aspect of it that he's so powerful that he finds that that life is boring, right? Like so like I associated myself a bit to him because I was like, okay, I like the challenge, right? I like to I don't like to be bored. I like to go explore new things. That's like a bit of what crypto is in a way, right? Like a lot of people that are here today are people that are explorers in a way, right? So yeah.
Absolutely. No, I love that. I totally agree with that. It's true. Crypto's like kind of got this like one punch approach to it almost, where you're like one punch man is like this guy can have an extremely powerful punch from like 1 inch away, right? Or is that a different? I'm thinking of 1 inch perhaps as well. Are those two different things?
I think it's two different things, but I mean, like you get the concept.
But anyway, yeah, exactly. Nonetheless, I do appreciate the background. It's always great. It's always interesting to hear where people come from. Like I appreciate that you were in construction before. This is a space that is open and available for everyone, and It's great to see how people come from all different types of backgrounds when entering the space. So thanks for that background on yourself, Saitama. And I'd love to take now some time to dive a little bit into Dopex and what you're building at Dopex. Can you tell us more about what exactly is Dopex, what you guys are building, and how this idea came to be?
Yeah, sure. So Dopex, I basically joined a few months after the launch, so I wasn't there at the beginning. But the whole concept of Dopex and why it piqued my interest as well is because it was one of the first derivatives platforms, so one of the first to bring on-chain options, right? So on-chain options, options in general is a pretty complicated and not retail friendly, basically primitive, right? A lot of people just buy basically when they go on TradFi, they buy stocks, or they buy either stocks or either they buy like options, but not really knowing what they're doing, right? Like just okay, number goes up or number goes down, right? But the fact that there was this protocol that wanted to basically bring those the composure of options on chain really interested me, because that's one of the most difficult aspects of finance, right? So basically I was writing articles and stuff, and basically Dopex saw me writing basically content for them, so they decided to hire me. And from there, I like grew with the company. Basically, learned a lot more into basically derivatives, or how they basically are one of the most they are the most composable tool that there is. And from there, we've basically changed the protocol by a lot, kind of. So now we're basically going into a new rehash of the whole protocol. So we basically are setting down V1. So I don't know if maybe I'll give a little intro of V1, and then we can maybe go over V2, which is basically
Sounds
something
great.
that's something that we'll be launching for in the next week. So for sure it'll be something that'll be cool to discuss, so people know that what we're doing and what we're going to, right? So V1 was specifically a vault based. So you'd come on Dopex to be able to either provide liquidity for selling options. So as an options platform, you can either sell options or purchase options, right? It's the same aspect as, for example, swap liquidity, right? So when you provide swap liquidity, you basically earn the fees from users going from one side to the other, right? So you allow a swap market for the retail side. So on Dopex, we had these vaults where users could come in and deposit liquidity, and this liquidity would be used for selling options, right? And on the other side, you'd have the retail come in and be able to purchase options on these vaults, for example, on Ethereum, on BTC, on all these major basically tokens, right? We also had on our personal tokens, Dopex and R DPX, but mostly were the blue chips, right? We were doing the blue chips. So the problem with that was that options have a lot of fragmentation, right? Because it's a lot of parameters when you purchase an option. You can either purchase a call option or a put option, which call would be like when you think it's going to go up, put is when you think it's going to go down. And then you would have different parameters. For example, okay, I want a weekly option or a monthly option. Or maybe I want to purchase an option at a certain strike, right? I want to purchase a $2,000 option. So every single strike and every single expiry would basically fragment the liquidity, because every option always needs to be fully collateralized, right? So it creates a lot of fragmentation, and that was that is one of the biggest issues with options on chain right now, and that's why we haven't seen it pick up as much as for example perpetuals, right? Like derivatives, where you would just basically purchase at the spot price, right? Like it's very simple. You deposit liquidity, and whoever wants to go long or short, they basically go long short at the spot price. So we basically the first V1 was very like it picked up a bunch of volume. We've had a like at the peak we had approximately almost 200 mil in TVL. So it was a successful product, but for us to take the next leap, we had to go into this revamp of the whole protocol, right? So to go through this new revamp of the protocol, we've came up with this new solution where it's a hybrid model. And this hybrid model, so this is V2 for everyone listening. This is something that we're launching next week, and this is actually something big for DeFi itself. So what we're doing is basically taking reimagining how liquidity is provided on chain, right? right now, when you provide liquidity on chain, you mostly provide a swap market, liquidity for a swap market. So you go on Uniswap, you deposit your tokens inside this pool, these two tokens inside the pool, and basically you allow users to swap between these two tokens, right? And you earn the swap fees for doing so. But when you deposit, you're short. So when I say short, it's basically what people call impermanent loss, is actually you being short one asset against the other, right? So when you provide liquidity on V3, for example, on ETH USDC from $1,000 to $2,000, for example, once you pass the $2,000 tick, you're completely converted to USDC. Once you pass the $1,000 tick on the bottom side, you're completely converted to ETH, right? And that's what we call impermanent loss, because you basically sell as the price goes down, as every tick passes, you sell your asset and you earn the fees from whatever swapping is happening, right? So this was a pretty composable and interesting model. It was very efficient, but it's not as efficient as people might think it is, because when you provide liquidity from $1,000 to $2,000, let's say the spot price of the asset Ethereum is 1,500. The only tick that's actually using that's the liquidity is being used is 1,500 tick, right? The spot tick, and that's the tick that's actually earning fees from the whatever swap fee tier you're deposited in, right? So let's say now you're just from $1,400 $1,000 to $1,499, and from $1,501 to $2,000, you're actually not earning fees. So all these ticks are basically just sitting idle within the vault, right? And what we saw there is basically an advantage, an opportunity basically for us to take advantage of that inefficiency. So this inefficiency allows us to come in and introduce this new hybrid model. And this new hybrid model allows us to basically come in and take possession of the liquidity, redeposit it on Uniswap, so you're still earning the fees of the swapping. But since when you deposit, you're short, and when you remove the liquidity, basically, if you deposit your short, when you remove the liquidity, you're long, right? So we can actually create an options buy market on the other side, and that would allow users to purchase liquidity within ticks that are not at the money, right? So we're basically upgrading the V3 model of Uniswap, for example, or any V3 dexes, to basically allow efficiency to purchase at any tick. So now you'd basically be able to purchase the $2,000 tick, even though the price is not trading there, you would be earning fees at that $2,000 tick, right? So it could basically, in a perfect scenario, if there's full utilization in options to our platform, you're now, instead of having one tick be used to basically earn fees, now you have all your ticks across the board earning fees, right? So it's a lot more efficient, and not only a lot more efficient, but more capital. It's capital efficient for the LPs, but also for the retail. We're creating a new market, right? Before it was just a swap market. Now we're introducing an options market from the same liquidity. So for an overall view of like what DeFi is, as let's say a new retail user comes in. Before he had the opportunity just to swap his tokens, right? Now we're creating from that same liquidity that's already existing on chain an options market right now as well. So yeah, like any chain that we're launching on, we're basically trying to revamp the whole liquidity system that they have into this new hybrid model, which will be beneficiary for pretty much everybody, right? Yeah, I'll stop it here. I know I've went on a rant there. Hopefully I covered pretty well what V2 is.
I think that was great coverage. I mean, this is obviously a pretty complex topic to explain in, break it down in simple terms. I think you did a really good job there, and I appreciate it. Maybe I can give a little bit of reflection on like the takeaways I had from there. So V1 was like specifically vault based. You can come in and provide liquidity strictly for selling options, but with the new V2 solution, the hybrid model, you're basically, as you mentioned, reimagining how liquidity is provided on chain. So you are basically taking possession of liquidity and able to reuse the liquidity that's provided on Uniswap for also funding or providing liquidity for the options markets, the underlying options markets on Dopex. That's how I understood it. Is that the correct takeaway there?
Yeah, 100%. That was great. Yeah.
Cool. And so that was definitely my next question. I wanted to ask you, what have you guys been working on during the bear market? Everybody knows Dopex as, one of the pioneers in options markets, as you mentioned, even the first options market in the crypto space from the last bull market and even before that. So thank you for covering all the progress you guys have been making during the bear market. And, along the lines of that topic, V2, I'm assuming, has taken the entirety or the majority of your development bandwidth here over the last few months. Is there anything else in terms of like new chain deployments or support of new assets that you've added over the last year that would also be relevant to highlight?
So we're not only like we're like that was a big portion of like our work of the last year, but I'd say there's also this new R DPX token, right? And I mean, it's been here for a while, but there was actually no real use case behind it because the idea at the beginning was like, let's set it as a rebate token for option losses or LP losses, right? So when you LP, for example, you have impermanent loss. We wanted to basically to be able to give this token for compensating those losses, right? And there's a lot of protocols that have tried that. The thing is that there's no backing behind this token, right? So a lot of those tokens that have launched previously were basically just trending to zero because you would basically give a rebate and this rebate would be just sold off in the market, right? So we basically are trying to revamp this whole idea. Instead of just launching the way it was launched previously with other protocols, we've decided to basically go into this V2 again, not V2 the same as what I just explained, but R DPX V2, right? So this is another portion of our protocol. And the idea behind this is still to offer rebates, but now we want basically these rebates to be backed. And we have a complex system behind it. It's complex, but if you take it on a high level overview, it can be very simple to explain, for example, for retail users. So the idea is, look, once you have losses, for example, on our platform through option losses, we'll give back a portion of that in rebates, right? So very similar to what, for example, in TradFi, sometimes they give credits and stuff like that, right? So you receive these tokens, and these tokens would be allowed to basically be bonded. So we would basically allow the users to have take these tokens that they would receive and bond them with some Ethereum that they have in their wallet. So they would go through a bonding process. And on the other side, let's say they provide it's basically 25% in R DPX and 75% in ETH. So now you basically bond these two assets together, and on the other side, you receive the synthetic ETH, right? And the idea behind the synthetic ETH is not only that it's a synthetic ETH, but it's also a yield-bearing synthetic ETH. So we're going through, there's different staking models behind the whole concept where you'd basically be earning from convex fees or stuff like that. I'm not going to mention them all, but you'd be earning from a bunch of different fees, and this would be a yield-bearing synthetic ETH, right? So now you're earning yield on your on the synthetic ETH, plus having received 25% out of this ETH through rebates, right? So now you'd basically be getting a 25% discount in a way on Ethereum when you bond, right? So in a way, it's very beneficial for the user to bond. But the thing is that we have a mechanism that we want basically this Ethereum to stay within our ecosystem. So now you'll be able to use this synthetic ETH to basically trade options or basically maybe lend against it or borrow against it or just lend it out or stuff like that, right? But the moment you want to exit the ecosystem, we basically need to retake back the losses we provided the user when distributing the rebate plus the losses of whatever discount fee we injected for the user to come in the ecosystem through this synthetic ETH, right? So the idea is basically you stay within the ecosystem, you gain value out of that, but when you leave the beginning discount that we give you, we basically take it back, right? But within the ecosystem, you can still have had exposure to that Ethereum fully and have gained from that, or maybe traded with that, right? So it's a very cool model. It's still unique to itself. It doesn't exist in DeFi, and it's a way for basically users to have keep a large portion of capital within the ecosystem, and whenever they want to exit, they just take their profits minus the whatever is needed for the system to always remain whole, right? So that's pretty much the high level concept of it.
It's a really novel mechanism, and I've seen like praise of R DPX across the industry or across, I guess, crypto Twitter, which I'm always scanning. Definitely seems like this has picked up a lot of traction for you guys. This new asset, and I'm happy you covered it. This was definitely one of the questions I wanted to dive into today. I mean, it also says on your site when you look into R DPX that this is the current utility, but there's much more utility that will be added for this token. I always like to try to squeeze as much alpha out of our guests as possible, but I'm not going to try to pressure you on that one today because I know you guys are launching V2 next week or pretty soon. So maybe we can just stay up to date with your socials and hopefully figure out those details and coming soon. But one thing I want to dive into before we get into the pricing of R DPX and other assets on Dopex as it relates to DIA is address the Dopex ecosystem, which DIA is actually, of course, a proud member of. And so in your docs, you reference how the beauty of DeFi lies in composability. I really like this. Or in other words, how the ability of a protocol to act as building blocks for other protocols to create synergies that are not possible when building alone, right? Really, that's the idea of composability. And it definitely appears to be one of the core components and missions of the Dopex platform. Can you address some of Dopex partnerships and share more on the nature of them? So some of them that I'm interested in learning more about is how you're working with Silo and GMX and perhaps Vesta if we have some time.
Yeah, for sure. So the composability aspect, what's fun about it is that actually options are the most composable primitive that exists, right? Like with options, you can literally basically have the most composable strategies that you want, right? Like so, for example, perpetuals would be only spot price, long or shorts. When basically options are basically at any price, right? Or even like you could replicate a perpetual position, you could replicate a spot position, you can hedge, you can insure. So options allow for a lot of cool basically integrations, composability with other protocols. But I'd say like one thing that's very composable will be Dopex V2 specifically, and the reason behind that is that like I mentioned, right, we're going through this hybrid model, but it doesn't stop there, right? It doesn't need to be just a hybrid model. It could be like I don't know what the word is for after a hybrid, but like it could be like multiple types of primitives all tied to the same LP, right? Because as an LP, if you think about it, like what are you as an LP? You're short, right? So as an LP, you're short when swapping. When you're providing liquidity on GMX, you're short perpetuals, right? Short whatever the users want to long or short, right? When you're basically lending out your assets on the lending platform, you're short as well, right? Options, you're short. So since you have the same exposure throughout all these different primitives, why do we have so much basically? Why are all these protocols separated, right? Why is that? Why is all the liquidity fragmented? When we could maybe have one liquidity pool, and this liquidity pool would basically provide liquidity for any of these perimeters, right? One cool aspect that options also provide is that it provides non-liquidable basic position, right? Like for example, let's say you want to lend out your ETH at $1,500. You want to borrow $1,500 against it. So let's say you purchase a put at $1,500. That put underlies basically $1,500 of collateral, right? So if you deposit one Ethereum within that put is made whole. So now you'd basically be able to withdraw that $1,500. So now you're essentially borrowing against your put. So you're borrowing against your put, and for whatever expiry there is, right? So it could be like a weekly, monthly expiry, and basically now you'd create a lending market, right? So imagine having this liquidity pool where there's spot volume coming in, there's option volume coming in. On these more far out the money, there's a lending market, and at the money, there's like also a perpetual market. So now you're accruing volumes from basically all the primitives that are on chain, which basically LPs make they make fees off of volume, right? Like they want as much volume as possible. It's not about how much fees they're generating, like the percentage of fees. It's more about the volume they're generating, right? So let's say they're generating a lot of volumes. Now their APY goes like a lot more up. They can basically start lowering the fees, and once they start lowering the fees, it allows the retail to have lower entry. It's a lower entry barrier, right? Like the trading becomes a lower. The cost is less, so they can maybe trade more. They can do. They can lend more. They can do whatever they want more. And now there's more volume, right? So it's a little flywheel. So it creates more volume, fees go down. It creates more volume, fees go down, and basically creates a better retail experience. So we're basically imagining a future of unified liquidity, and where we are in the like to come back to partnerships. We're basically just we don't want to build basically the we want to partner with like as much partners as possible, right? Like the idea is, look, let's build this hybrid model on top of any DEX that's existing out there, right? Like we don't want to take out the value that these DEXs are bringing, because the underlying technology of building the pools themselves require a lot of work, right? We are building the top layer, which makes it better, that makes the pools themselves better, but the underlying pools need to be built out themselves as well, right? So the idea is, look, let's build together. Let's just partner with these DEXs, build on top of them, and basically improve on both sides, right? What's cool about also the V2 is that in the future, maybe with V Dopex, so we have this lock-in system similar to Curve, where you basically lock it for 4 years. Is that usually with Curve, for example, you'd be able to direct emissions, right? With Dopex, what's cool about it is that, let's say we accrue a lot of the liquidity that let's say, because they need to deposit through us for us to deposit on Uniswap, for example, right? So then we can basically go tap into the liquidity and basically withdraw the assets, which allows us to create an options market or a lending market or whatever we want, right? So the idea is that since they deposit through us and we deposit to the DEX, at one point when we own a lot of the liquidity, we become, in a way, the liquidity hub, right? And let's say you're a V Dopex holder, and I imagine a future where DEXs would fight for these V DPX, because the idea is that we don't want to just direct emissions, but we can also direct liquidity. So now imagine you're Sushi Swap or Uniswap or Camelot, for example, and you'd basically be you own a percentage of the V Dopex, and you basically say, look, Dopex owns a lot of the ETH/USDC liquidity, and I want them to deposit to us, right? So they'd be able to direct not only the emissions, but also the liquidity to their platform. So now we would basically deposit the ETH/USDC that we own to their pool. And from there, we'd basically be able to not only still have our options market for us, but they would be able to have their swap market by directing the liquidity and more in depth liquidity for their pool, right? So interesting thing that we're maybe looking into in the future with this, but yeah, I don't know if that covered the question.
No, it does. What's really interesting there, what like my large takeaway is how you guys are imagining the future of unified liquidity, right? As you started from the top of this conversation, you mentioned perhaps the biggest hurdle in the way of options markets adoption in the crypto space is this lack of liquidity. And you dove into how there's different strike prices, different expiry dates that all need underlying liquidity. And that was, previously in V1, perhaps, as we mentioned, a hurdle to adoption. But as you guys are implementing V2 and you're discussing this in the scope of partnerships, it's really interesting to hear your take on liquidity and how you're basically going to unify this across the teams that you're working with in this space. I think that this is relevant not only just in options markets, but overall. You guys are sort of, once again, pioneering the idea of unified liquidity and how to manage this within protocols that require deep amounts of liquidity, great liquidity depth, and have been historically sort of at the will or whatnot, sort of experiencing that as a hurdle. So I mean, the big takeaway here is really the liquidity strategies that you guys are implementing to tackle this issue. So one thing I want to talk about while we are on the topic of liquidity is dive into asset pricing. And maybe this would be a good time to discuss the integration and the collaboration between DIA and Dopex. Could you, Saitama, give us some more context into the role that DIA oracles play with regard to Dopex, R DPX, and why you guys selected DIA as your oracle provider for this component?
Yeah, for sure. So to like I don't know how deep in the weeds I want to go, but the idea like what I just mentioned with the pools aggregating volumes from like all types of primitives is actually even maybe a future potential partnership. I mean, we already are partnered with Dia, but the idea, not pun intended, but the thing is that it could be a possibility for Dia to also integrate us the same way, for example, you guys use DEXs to basically take oracles, basically provide oracles to your platform, right? So maybe in the future, it could be a good idea for like an integration with us also, because maybe a lot of the since we have a lot of the liquidity that's being traded, right, or the volumes happening, it could be like a future partnership where Dia could use us as an oracle provider, right? So. But to get back into pricing for RDPX, so RDPX, we needed basically an oracle for RDPX because we have this complex model of like bonding and everything happening on the back end, right? So, and the liquidity is actually mostly going to be protocol owned liquidity. So the thing that we have to do with protocol owned liquidity is that with our model is that we need to basically have a V3 liquidity type of a pool and a V2 type liquidity for the same bonding process, right? And the reason behind that is because we use the V3 pool as an AMO for basically LPing. How can I explain this in simple terms? So we use the AMO basically to earn fees from RDPX and ETH. But the thing is that we remove the liquidity in a way that we basically earn more Ethereum out of that trade, right? And the reason for that is basically we want to accrue as much Ethereum on our treasury for when users are able to basically redeem their tokens at the end line when they want to exit the ecosystem. As I previously mentioned, we want the treasury to have as much Ethereum as possible, right? So the whole idea behind the V3 pool is basically for us to be able to extract as much Ethereum as possible through this AMO model, right? For the V2 type of pool, this is basically just for users to basically come in and purchase Ethereum, the same Ethereum, sorry, RDPX, the same way they would usually. And for us to basically use DIA as an oracle provider, it allows us to have a pricing mechanism for us to keep track of the RDPX pricing as we bond, right? Because when we bond, we basically go through this rigorous process of basically removing liquidity, adding liquidity, and basically going through the AMO to basically extract the Ethereum from the other side, right? So, so yeah, like basically, an oracle provider is actually very important in this model, and that's why we basically partner with guys like Dia. Because they basically allow us to go through an oracle without the basically the necessary. For example, Chainlink, they have necessities that are very like a lot more complex. They require a lot more stuff, which wasn't something that we wanted to look into or was a bit more complex for this model. But we wanted to basically go to Dia because they had this more just like providing the oracle for us in a simple manner without any questions asked. Really, you guys did an incredible job. Like, and for example, I think it was like not even a week. You guys actually had us provide that oracle, right? So, yeah, it was a great partnership.
Yeah, I appreciate that. And thanks for the insights. And glad to see that we were able to deploy for you guys quickly. We always strive to move fast in this space. We know teams, like to ship fast, so we don't want to be the bottleneck in that process. I think one of the advantages in the collaboration here for us supporting our DPX is that the liquidity for our DPX is provided on DEXs, as you mentioned, right? So DIA, we are uniquely the oracle which looks into dexes as one of the primary sources of price information, and we dive deep into an analysis of the liquidity that's underlying these assets within these pools. As you mentioned, that met the criteria for us to provide a production ready feed for R DPX, given the depth of liquidity that you have across the different DEX pools on which this asset's traded. So we were able to support this and ship this quick. And I think our teams have actually been connecting for quite some time now. Even before I was on the DIA team, I think we were exploring collaboration. So I'm really glad to see that things are alive and better than ever between us. And as you mentioned, I mean, really one of the exciting things, and I say this a lot, I do say this relatively frequently, but one of the exciting things about working on the Oracle side is how these different use cases and applications are yet to be fully realized, right? We're in this unique position where we can support teams that are building out novel architectures, such as what you guys are building. And as you mentioned, even in the future, exploring using Dopex's native liquidity, the assets and the liquidity that's being provided onto Dopex as sort of a source of information for the pricing of assets. I'm not suggesting this is like something. This is just a very preliminary idea of the feasibility of that, of course. But I think it's interesting how all of these use cases are still, opportunities, and the space has a long way to go, and that's part of what keeps the role in our lives exciting over here at DIA and within the crypto space. So I'm glad you got to speak on that a little bit. And I want to be time sensitive here and shift towards sort of an outlook on the future. You mentioned already V2 is coming up. Really excited for the updates there and to read more about that after the call, and to combine everything that you've shared with us today into future investigation. Um, Besides that, I was going to ask if there's any other upcoming developments, but you know, really what I guess I would ask you is how does Dopex plan to continue distinguishing itself apart from other options protocols going into the next bull market cycle? Apart from liquidity, what are your guys' core focuses? How do you plan to stay relevant as you have done so well in the next, let's say, even 2 to 5 years?
I'd say for sure, like we're doing something pretty unique. I don't think like there are other options protocol that are going through this hybrid model, but they're going a different route. We're going like they're basically doing perpetual options. We're basically sticking to the traditional options, but the idea is that I think the option space has a lot of space to grow, right? Like if you look at TradFi, it is one of the biggest volume accruing primitive, right? So on our side, DeFi has a lot to grow, and not only DeFi has a lot to grow, but the option space even more. On-chain option space has a lot more to grow, right? So we do have like a roadmap, a clear roadmap on our end. So as long as we follow that roadmap and the vision that we have, I think at one point when the retail starts picking back up in DeFi, and we start seeing more of an inflow of users and capital, there'll be a market for options. There'll be people that are interested in options, either whether it's retail or institutionals or people looking to for hedging and stuff like that, right? So our basically our full focus is just building the best options protocol. Not only options, like for liquidity provides the best liquidity possible, liquidity pools for them basically to LP and not only be exposed to being short on options, but being short literally everything and accruing fees from across the board. But for the option side, also we're basically focused on building the best trading experience. So that would be either through portfolio margin or maybe cross collateral, stuff like that, just having a more seamless flow for buying options and maybe even selling options, right?
Yeah, and in addition to optimizing liquidity across the industry and across options markets here, what do you envision for sort of the types of assets that people will be hedging or taking out options on in the future? One thing I've noticed is you guys have added support for staked assets, right? I believe you have staked ETH, support. And correct me if I am mistaken, but I do believe I saw that yesterday on when I was doing some background research or updating myself. What other types of assets looking forward, do you expect people or to be integrated into options markets in the next 3 to 5 years?
Um, I think like if you look at the metrics, you see that most of the volumes are just like I would say 95% and plus happen on the blue chips, right? Like Ethereum, BTC, and like a bit of like the L2s and stuff like that, right? So I still think that for exotic assets and more like smaller market cap tokens will not pick up a bunch of volume yet, maybe spot volume and stuff like that, right? But in terms of like trading volumes, maybe like speculative, there's like these like for example when there was Doge and Pepe tokens, if it would have been cool to have call options on those, of course. But at the end line, it all depends on the amount of liquidity, right? Like if you trade on 100K pool of liquidity, right? Like moving the asset is like super easy, and manipulating the prices and stuff like that, right? So like I think for our end, we'll probably stick at the beginning with most of the blue chips, just because they're more secure, they're more reliable, and you can get also like oracles and stuff for them, right? But yeah, like you don't want to be trading and getting wrecked, right? Like we don't want to be promoting LPs to be, for example, LPing on this X token which has no liquidity, and basically they get wrecked in a way, right? So so yeah, like it will probably stick to like where the most of the volume is for now, and that's the pretty much the idea there.
Yeah, that absolutely makes sense. Well, it's exciting to look forward into, like supporting for long tail assets, as you mentioned. Really, the most important aspect as it relates to the pricing of this is the cost of manipulating these assets at the source, right? And so it's great to hear, the approach towards further securing the protocol and ensuring that you're not supporting tokens that are risky in any regard. So thank you for that context. And let's transition into sort of like the wrap up here. Saitama, is there anything that I missed, or any updates or end user differentiations between Dopex and other protocols that we didn't mention that you want to highlight? And if not, or in addition, I'd love to give our audience the chance to better understand how to stay up to date with Dopex, where to go to learn more about everything that we mentioned today. Can you give us some chill, some insights onto your socials and how to stay in touch?
Yeah, 100%. So like just so everybody knows, we're launching like the V2 product next week, right? So that's big. We also won the Arbitrum stip, right? It passed. So we have a bunch of like R coming our way, and once they come our way, we basically are going to be deploying that on this new product, right? So if you guys want to contribute with liquidity providing, or maybe just use the platform by purchasing options, you can basically come on our platform with V2 and basically use that, right? Or on the other side, there's R DPX V2, which allows you to bond, have synthetic ETH, and it will be yield bearing synthetic ETH, right? So we're aiming for high APRs at the beginning through the Arbitrum steps. We'll be incentivizing through that, and there'll be a bunch of yield bearing ways for us to incentivize it. But the idea is like if you want synthetic exposure to ETH while having pretty good APRs on it, RDPX v2 is definitely a possibility for you to explore. Another like maybe a little alpha here that we basically like TZ, which is the CEO, he launched an article not long ago. If you look at the bottom of the page, it says that once the Dopex V2 launches, we'll start tracking all the activity happening on Dopex V2, and there's a possibility for like go check out the article. I don't know how much I can say, but there's a thing that if basically the more activity you have on our platform, the more you'll be exposed to whatever is written in the bottom of that article. So I can't say much. I know that there's like a hint there. If you guys want to go check it out, go check it out. Yeah.
I'm laughing over here behind the mic. That was That was a not so inconspicuous hint there. Just kidding. I appreciate the alpha. I mean, we always like to squeeze some alpha out of our partners here whenever it's appropriate. So thanks for sharing that insights. I mean, it's really exciting. I think this was the perfect time to bring you guys on for Partner in Focus. So thanks for joining us now at this really important sort of transition that you're going into V2 here. I know I've already seen some comments from the discussion today about how people are, excited for what the future holds for Dopex. I know all of us are well familiar with what you guys have done so far for this industry. So really proud and honored to partner with you guys. And thanks for joining us today, Saitama, and sharing more about, sort of this candidly complex topic as relates to DeFi. You mentioned options. There's some hurdles in the way, and primarily related to the liquidity discussion we had today. And it's really interesting to see the approach and how you guys are tackling this, and sort of the approach you're taking to solving this issue. As I mentioned, it's not just options markets. There are, I think DeFi overall, many of the novel architectures suffer from, or not suffer, but experience a lack of liquidity that holds them back, right? As you mentioned, so the support for certain tokens on Dopex is limited to blue chips as of now because of the lack of liquidity for those assets, and to create resilient price feeds for them. So once again, you guys are not only innovating for just Dopex alone, but for the industry at large. And I gotta say, I appreciate that, and I want to thank you again for coming on and sharing these insights with us today.
Hey, thanks for having us, and really appreciated all the commentary. And thank you everybody for joining the call. And if you guys have any questions, feel free to come on Discord. We're all there to basically answer the questions, help you guys out. If you guys have issues like learning about options and stuff like that, let us know. We have a learning section on our blog, so you can go check that out as well. And we have Nutoro, which is our co-CEO, if you could would say, which is he's a funny guy. If you guys want to check him out, he's definitely worth a Twitter follow, I would say.
He's great. He's great. I had the honor of meeting him in person, actually. Yeah, he's great to work with as well.
You met him in person. That's actually interesting.
He does exist. He does exist IRL.
Okay.
And he's just as funny. So yeah, he's a great person. And definitely people in the audience, I would say go check out the platform, right? We had a pretty complex discussion today, but the Dopex does a great job to make the UX and the UI quite easily understandable. So it's a cool experience to dive deep into the options markets, especially within the crypto space. And when people are building out novel architectures that are at first hard to understand, oftentimes I find those are the ones that are the most interesting and the most rewarding to really look into and research. So yeah, sorry for my end shill here as well, but it's great to work with you guys, Saitama. I'll wrap it up. I'll close here and let everybody get on with their day. Thanks to everybody in the audience who joined us for this episode of Partner in Focus. Really enjoying these. Let us know your feedback. Let us know if you guys are enjoying these, and what other types of partners in the DIA ecosystem you want to see us bring on. Or if you have any questions, always feel free to drop them in the comment section below. And we'll see you on the next episode of Partner in Focus, everybody. Take care and have a great rest of your day. Thanks again, Saitama and Dopex team. See you next time.
Thanks, guys. Ciao.